Welcome to the Economy Magazine at I24 News. I'm Benjamin Chong Alfares with news from the world markets and the global economy. On today's show, Toshiba books a financial loss for the past year as it gradually moves beyond a $1.3 billion accounting scandal. And Saudi Arabia constructs a new public transportation system to accommodate its rapidly growing population. First, the headlines. Trade data from Beijing indicates the economy fared worse than expected in August, raising concern about ripple effects in world markets. August imports fell 14.3% compared to August 2014, the 10th consecutive decline and the worst performance since May, making a third quarter rebound less likely. Exports fell 6.1% from last August, compared with an 8.9% drop in July. But given the greater drop in imports, the trade surplus expanded by 20.1% from July to $57.8 billion, just below a February record. In the first 8 months, the trade surplus jumped 80.8%. Australian Prime Minister Tony Abbott said opposition to a landmark free trade deal with China is driven by racism, but his opponents pointed to weaknesses in its labor provisions. China and Australia sealed a trade agreement last year that was more than a decade in the making. The deal will open up Chinese markets to Australian farm exporters while lowering impediments on Chinese investment in resource-rich Australia. But the opposition pledged to withhold support for the deal in Parliament unless greater protections are introduced for Australian workers. China is a key market for Australia to help it transition from a reliance on exports of minerals to expanding its food and agricultural exports to a growing Asian middle class. But Australia's declining manufacturing sector and the end of a mining boom increase anxiety that the deal would do little for struggling Australian workers.
The only free trade agreement that members opposite have complained about is the free trade agreement with China. What have they got against China? On my right. It is a campaign of lies. Xenophobic at best, racist at worst, a campaign of lies being peddled.
The European Commission announced €500 million in aid to farmers struggling with low prices following the loss of exports to Russia under EU sanctions. The decision was made following an emergency meeting of the EU's Agriculture Council in Brussels, where nearly 5,000 farmers with more than 1,000 tractors had been protesting. The European Commission said it would help farmers with cash flow difficulties, stabilize markets, and improve the functioning of the supply chain. The plan allows member states to advance some payments to farmers through the French agricultural minister said further work was needed to support them.
500 million euros, it's real money, which is supposed to help farmers to produce sustainable manner food for us who love food.
Egyptian billionaire Naguib Zawiris urged the prime ministers of Italy and Greece to allow him to buy an island to house refugees fleeing war. Zawiris made the appeal following the shocking images of 3-year-old Syrian migrant Aylan Kurdi, who washed up dead on a Turkish beach. He accused Western countries of creating conditions that triggered an exodus to Europe and then failing to take decisive action to create stability. The business mogul said he felt encouraged by people from around the world after he first tweeted about his desire to buy an island. But he also expressed concern about the spread of Islamic State, which will likely create more refugees, and accused the West of being too soft on militancy.
Today, 2 DHLs went out to the Prime Minister of Italy and the Prime Minister of Greece. And a copy of these letters went to their embassies today. And all what I'm asking is, find me an island, I'll make the financial payment for it. Look at our tourism industry, totally devastated, you know. So I worry on people's jobs, life, our economy, free currency. We don't have any foreign currency anymore. I mean, it's just, they destroy jobs. You know, one man with a rifle, with a motor rifle, destroyed the economy of Tunisia, one guy. He walked on the shore with a machine gun and then killed people haphazardly like that. A result equal killing the Tunisian economy. The way we are going to confront these people is unacceptable. You kill, you get killed. Nothing else.
Japan's Toshiba booked a net loss for the past financial year and pledged a bold restructuring as it might finally be moving beyond a $1.3 billion accounting scandal. Shelby Weiner has the report.
In the wake of a $1.3 billion accounting scandal, Toshiba announced on Monday a $318 million loss. The 140-year-old conglomerate fell blame to overzealous pursuit of profit, causing the company's CEO and several other board members to resign. The company now clamors to regain trust from its investors.
We cause tremendous trouble to investors at home and abroad, as well as our 400,000 shareholders, and we painfully feel the social responsibility. We will work towards recovering Toshiba Group's credibility.
Although the submission of its books reversed the previously expected 120 billion yen annual profit, investors were happy to have the numbers released after being postponed twice. A concern had been growing the company would be at risk for delisting if it missed the filing deadline. Now Toshiba faces government concerns after amending the numbers.
It is extremely problematic that Toshiba's past earnings had to be adjusted. They did not give the markets precise and correct information. As a government, we'd like to see a thorough investigation into Toshiba's falsification of the security report in order to guarantee fairness in the stock exchange and to protect investors.
The Japanese government announced its intention to investigate shortly after the books came out. And now reports of the JPX issuing a 91.2 million yen fine, as well as potential fines from financial regulators. Toshiba's future is still on the rocks. The company could not supply financial forecasts for the rest of the year.
Israeli tourism made a comeback during the first half of 2015 following a drop during last summer's war against Hamas. Although the data seemed to show a recovery, security concerns may have cut short what had been a trend of increasingly strong numbers of foreign tourists. The following interview has more.
On set, we have Roni Fortis, Hilton Director for Israel. Thank you so much for being with us.
Thank you for inviting me.
Tell us about the flow of tourists this year.
This year is showing a reduction in number of tourists to Israel. It's contributed to many factors. One is the economical situation in Europe. Europe is a major market. One is the political situation in Israel, post-Gaza operation in the summer, and probably some political issues worldwide. Altogether, we are down, and altogether, we're not going up. In the past so many years, give and take 10 years, we're very stagnant on these numbers.
Well, you mentioned a drop in Europe. Where are you seeing the most growth? From which countries do you see the most tourists coming?
There's no really growth. If you take Europe, the Russian market has almost disappeared following the crisis there. The French market, the British market are probably down because of the exchange rate. We're not a cheap country. Because of the economical stress in these countries. If you take the US, a bit more than 5 years ago, but not better than last year. That's again post last year's crisis, war, and probably political situation versus the world, Israel, what's happening in this country.
So is this unique to what you're used to seeing post-war? Because of the situation we're seeing globally?
Yes. You always see after a war cycle. It normally takes give and take 2 years to be fully loaded, fully back to normal. We are not yet 2 years. And we have a lot of distractions beside post-war, which doesn't help either.
Well, in September, it marks 50 years since Hilton has entered the Israeli market here. How would you describe the Hilton experience in Israel? How does it compare to other areas of the world?
Well, the Hilton Tel Aviv is a Hilton, but is much more than a typical Hilton worldwide. It became an institute. It became a landmark, not only in Israel, but worldwide. 50 years have passed, but the hotel has been renovated and changed its faces altogether a couple of times. We're leading the market all these years, and it is a major hotel in the Hilton scene worldwide and definitely in Europe, which is quite significant for a small country.
Well, as you mentioned, Tel Aviv is a very dense market, especially when it comes to anything, really, because it is such a small country and there's not a lot of space here. So how do you stay above the competition?
Well, we have owners and a company that are willing to invest a lot of money. The amount of investment that we put in this hotel over the years is unparalleled to any other similar product internationally and locally. We just finished a big project of about $50 million of redoing all the rooms. We're entering now a new project of redoing all our public facilities for about $30 to $40 million. So we are spending a lot of money. We are positioning the hotel differently than what is the market status. Competition is coming up. We're trying to be ahead with these actions that we are taking.
Well, thank you so much for coming on the program and offering this insight.
Thank you. Thank you for your time.
With a population of more than 5 million people, Riyadh, the capital of Saudi Arabia, is also its biggest city. A new public transport system to serve its fast-growing population, which has more than doubled since 1990, is now being constructed. More in this report.
$22.5 billion. That's how much Saudi Arabia invested into building a subway for their capital. The major project orchestrated by a conglomerate of Saudi, American, and German companies. Siemens won a $10 billion project designer contract.
The Riyadh Metro is a public transport network that operates at an international standard. It will contain stations and tracks that run both above and below ground. The length is about 176 kilometers with 85 stations, including 4 main ones.
In the next decade, the population of Saudi's capital is expected to grow by 2 million, hitting 8 million inhabitants by 2025. The metro is designed to relieve the increasingly difficult traffic, but for now, Riyadh is more gridlocked than ever.
I think that all the citizens of Riyadh have seen the big change in the city since we start. Now they are suffering a lot the impact of the metro. We are trying to mitigate on a daily basis, but we are very thankful for their support and their patience. We have been working the last 22 months. I think that the progress is around 21%, so we should be very proud about the progress that we have achieved up to now.
Authorities plan to inaugurate the first line by 2019. It could accommodate 400,000 people a day, with the objectives to modernize infrastructure and diversify the economy in preparation for post-oil. The government's goals extend beyond improving the quality of life.
Over now to the U.S., where private sector jobs rose modestly in August by about 190,000 jobs. And for more on how that and other factors may influence the U.S. and global markets, we're joined now on the phone by financial markets expert Andy Bush. Andy, how are you?
Good, Benjamin. Great to be on again.
Thanks. So the U.S. employment numbers, are they strong enough to get the Fed to act?
I think they are. I think the Fed has been hesitant to signal that they will raise interest rates right away due to the volatility in the financial markets. But things are calming down, and there's every reason to believe that the Fed should raise interest rates. So it's really a question of whether or not they have the guts to do it, because this is something that's been too long put off.
Okay, well, let's change our focus now to China, another very important market out there, where foreign exchange reserves fell by a record $93.9 billion on UN intervention, their largest monthly drop ever. Can you elaborate on the significance of that drop?
Yes, this is when the Chinese allowed the yuan to devalue, and then it got out of hand. And when it got out of hand, they had to intervene to sell U.S. dollars that they had in their reserves. So it really underscores how fast that market moves. And you have to be extraordinarily careful when it comes to currencies, because if you indicate that you want your currency to weaken, the market will make it happen very fast. And that's the big takeaway.
Right, and so now moving back to the U.S., I mean, Congress just returned from a month-long recess. What are the key issues that need to be resolved here?
Right. So the first order of business is going to be a vote on the Iranian agreement. And I think the president has the votes to be able to override the veto that would come from a disapproval legislation from Congress. In other words, this is going to happen. It'll be very close, but I think he's got about 3 votes in his pocket. The other thing for the markets that's really important, of course, will be whether or not Congress can pass budgets to keep the government funded past October 1st. There's going to be a lot of infighting that goes on, a lot of things attached potentially to these bills that President Obama would veto. So we're going to keep a very close eye on that.
Okay. And is there going to be any fallout, so to speak, from this situation here regarding the Iran deal?
Well, I think the major thing is to watch is the oil markets, right? Because if there were enough votes to override a veto, then we would see the price of oil go back up because it would take off the Iranian oil from the markets. But that's not going to happen. So I think from that sense, it's really up to Israel how they decide to act. And if they decide to act unilaterally against Iran, that's the major question mark for the markets right now.
Okay, so we're really looking at a situation that is relatively stable and predictable, yes?
For the time, well, as much as the Middle East can be. Obviously, right. There's tremendous turmoil in the Middle East right now with the immigration into Europe. But for the time being, it looks like a lot of the volatility in the markets has settled down a bit.
Okay. Well, thank you very much, Andy Bush, for joining us on the show and giving us more information. Thank you very much for watching, and join us again. Thank you.